Here are 5 steps to get started if you are a beginner for investing in stocks. Number 1. Define your risk tolerance. Stocks can be categorized into different types, such as large cap, small cap, growth, and value stocks. Each type has a different level of risk. Once you know how much risk you are willing to take when investing, you can choose the types of stocks that are right for you. Number 2. Determine your investment goals. When opening a brokerage account, an online broker will ask you about your investment goals and risk tolerance. These are important factors to consider when choosing investments, as they will help you determine the right mix of assets for your portfolio. Investment goals can vary depending on your individual circumstances and needs. For example, if you are just starting your career, you may want to focus on increasing the amount of money in your account. If you are older, you may want to generate income as well as grow and protect your wealth. Other common investment goals include buying a house or funding your retirement. Risk tolerance refers to how much risk you are willing to take with your investments. Some people are comfortable with a lot of risk, while others prefer to play it safe. Your risk tolerance will affect the types of investments you choose. For example, if you are not comfortable with a lot of risk, you may want to invest in bonds or other low-risk assets. It is important to define and review your investment goals periodically. This will help you stay on track and make sure that your portfolio is aligned with your goals. Number 3. Determine your investing style. Some investors prefer to take an active approach in managing their investments while others prefer not to. There are 3 main ways to manage your investments. The first way is if you are confident about your investing capabilities, you can manage your investing and portfolio on your own by using traditional online brokers that allow you to invest in stocks, bonds, exchange-traded funds ETF, index funds, and mutual funds. The second way is you can get an experienced broker or financial advisor to help you monitor your portfolio and make changes to it. The third way is to use a robo-advisor that typically has lower costs than working with a broker or financial advisor. Once a robo-advisor program has your goals, risk tolerance level, and other details, it automatically invests for you. Number 4. Choose your investment account. There are 3 main types of investment accounts that you can use to start investing in stocks. The first type is a retirement plan at work, such as a 401k, which is a great way to invest for your future. You can choose from a variety of stock and bond mutual funds and target date funds, and your contributions are tax deductible. Your account balance will grow tax deferred, which means you won't pay taxes on your investment earnings until you withdraw them in retirement. Once you enroll in a plan, contributions are made automatically at a level you set. Your employer may also make matching contributions on your behalf, which is essentially free money. This is a great way to maximize your investing dollars with little effort. It can also instill in investors the discipline of regular investing. The second type is an IRA or taxable account at a brokerage. You can also start investing in stocks by opening an individual retirement account IRA or a taxable brokerage account. IRAs and taxable brokerage accounts offer a wider range of investment options than retirement plans at work, such as individual stocks, stock mutual funds, exchange-traded funds ETFs, and stock options. The third type is a robo-advisor account. This type of account takes your investment goals and creates a stock portfolio for you. Number 5. Diversification to reduce risk. By investing in a range of assets or diversifying, you can reduce the risk of your investments. In simple terms, it means do not put all your eggs in one basket. One way is to invest in mutual funds and ETF, as both types of funds tend to own a large number of stocks and other investments. This makes them a more diversified option than investing in individual stocks. I hope this video helps you in being one step closer to your financial goals. Please remember to click on like and subscribe. After you have subscribed, please leave a comment in the comments section below and I will try to reply to your comments. I'd see you in the next video. Bye.